everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News website. One of our sponsors, Galantas Gold, had some excellent drill results out from their project in Ireland, and the company still has a very modest valuation. I think it's a good one for investors to look at. For example, in their last news release, 17.4 grams of gold and 74 grams of silver over 13.1 meters. They're starting to get some very nice thick intersections, and I've got Mario Stefano on the line to talk about that. Mario, thank you very much for joining us today.
Thanks, Alan. Thanks for having me. I'm always just enjoy coming on your show.
Well, let's get into this, because not only did you hit some excellent grades, it seems that as you transition into this harder rock material than the historical mining, you're starting to tag thicker intersections of high grade. Let's talk about that, Mario.
So, yeah, as you just pointed out, you know, we drilled the Joshua deposit from surface. It's an exciting deposit. It's wide open on strike to depth. And our geologist, Sarah Coulter, had a theory of these dilation zones. And I think in some earlier chats, we've talked about that. And she's able to start to predict where these dilation zones may occur. And also we hit a great one now at the Joshua vein.
Just to put that into context for our investing audience that are not maybe geologists, these dilation zones, these orogenic systems are like big cracks in the earth. And this allows the fluid to come up. But oftentimes they'll be over thin intersections, let's say a meter or two. Dilation zones are where that near surface rock opens up even more. And that's why you start to see these 17 or whatever meters, 11 or what, you'll correct me. These dilation zones are very important because they can create what we call jewelry boxes inside of those big cracks in the earth. So go ahead, Mario. Sorry for the interruption.
No, that's a great summary. And you know, let's not forget, within that grade hole, there's actually 8.7 meters of 25 grams gold. So we know we're going to get some good grades here. And this is not a one-hole wonder. This is the best hole we've ever drilled to date, highest grade and widths. But you know, 45 meters below this, we hit another grade hole in 2015, which was over 20 meters at 10 grams. And so we're starting to really now understand where these potential dilation zones may occur. But as I said in the news release, Alan, we've really only focused on 2 of the 16 veins identified to date. And we know there's going to be more veins as we look for them. But this is getting quite interesting, because you know, the ability to hit these kind of grades or these kind of widths with good continuity and good grade distribution. And it was a great question I had from a potential investor, and he asked us, you know, did you have a super high spike here of 300, 400, 500 grams, and you smeared it over these 13 meters or the 8 meters with the 25 grams? And the highest sample we had here was 75 grams. And this is very typical of our ore body. We don't really get big spikes. There's no VG here. It's very continuous, which allows greater predictability of where the ore may be. But at the same time, from a mining perspective, this is going to make our life a lot easier, because once we're in an ore body and once we're following a vein, we know we're going to get pretty consistent grade. And that's going to be easily reconciled, I hope so, obviously, to the block model once we get into the mining side. But I don't want anyone here to forget that this is going to be a really interesting story, because we're going to be in production. But the exploration potential here, I think, is just the very beginning of what we're going to start to find at Galantas.
Yeah, and one of the things that I'm always looking for in high-grade deposits, Mario, is continuity of the high grade. Not just in the hole to hole and along strike and at depth, but also inside the hole. And that's what you're showing there. You had a great quote in your last news release, and I'm going to quote you. Mario commented, And I quote, as Galantas advances underground mine development towards production, detailed mapping of the exposed mineralization identified zones of thicker widths, suggesting the significant potential to not only identify wider zones of mineralization, but higher grades, and the opportunity to significantly expand current resources with additional drilling. The Joshua and Kearney veins remain open along strike and to depth, and only represent 2 of the 16 veins identified to date. With the encouraging results from our current program, Galantas is evaluating accelerating the planned underground development and the required infrastructure to the Joshua vein, which is currently 240 meters west of the Kearney development. This will allow for 2 additional drill plays for multiple underground drills at the Kearney and Joshua veins to expand and accelerate the drilling program. A lot of great stuff in there, Mario.
Yes, no, we try to, really lay out what our strategy is going forward. In that quote, lots of information in there, but just to really summarize here, obviously we always plan to move towards the Joshua vein to start mining the Joshua vein, but that was a little bit further in our mine plans. And with the continued success we're now seeing at Joshua with multiple intercepts, high grade, good widths, and it's still very shallow. Just to be very clear on the Joshua vein, we've only really drilled this to 170 meter depth. And this is wide open. These are orogenic veins that are going to go down to the bowels of the earth. So we just got to continue drilling. So one of the strategies we're looking at now is advancing the underground development towards Joshua, so that, as you mentioned, we can get 2 drills drilling at Joshua, a drill at Kearney, maybe multiple drills at Kearney as well, all from underground, lower cost. It's not wasting money because we're going to go there anyways to mine these ore bodies. So really, we're just advancing our development that allow us to define resources and then quickly move to mining once the time is right to get the ore out of the Joshua vein. So I'm pretty excited. We will need to get more infrastructure in place, and it's really making sure that we have the electrical power to run multiple drills from underground, because also we got lots of mining equipment, lots of things going on with the mill. So we just got to make sure if we need to upgrade some of our power generation that we're going to be able to do that. And that's what we're looking at, as well as our mining team is focused on getting the asset into production. So if we're going to do some additional development, moving it forward, I may need to bring in a contractor. So those are the sort of things that we're evaluating, but it's going to be low cost to get ourselves in a position to really drill Joshua from underground. And that's really what's really enticing here.
Well,
and I've talked to...
Sorry, in your comments, you made some really important comments. One of those is the dual track of development and the drilling. And you also mentioned predictability. You're understanding the predictability, but the other great thing is that you can attack these from underground. So you don't have to waste 200 meters of drilling. You can almost be drilling right into them. So
yep,
lots of great stuff happening, Mario.
Yeah, exactly. And as you pointed out, the predictability of these dilation zones is going to be really important, and we're starting to understand that. And I talked to a lot of our shareholders obviously after that drill hole, and we got some real significant shareholders. I went from Eric Sprott to Mike Gentile to Ross Beatty and Melcourt, Premier Milton. I think we got the who's who of the shareholder list in Galantas. And what's really come apparent, and I've been saying this for quite some time, production here is going to be really interesting. It's going to be supportive of our strategy. But as we move from say 8 or 9,000 ounces to 18 to 30 or 40 or 50,000 ounces, that's going to be fantastic. But really what's going to drive the share price here is the ability to really expand the resources. And our major shareholders are really keen to have us spend and focus on expanding our resources and continue to drill these kind of holes. But at the same time, which is really important for all of us, is minimize any dilution, right? So that as we advance our project and we generate cash flow, put that right into the ground and drill.
Well, that really excites me. I'm a high-grade gold junkie, And one of the best high-grade gold systems in the world right now is the Swan Zone at Fosterville, owned by Kirkland Lake. And what was really exciting about that is as they started to get deeper, they started to get into those jewelry boxes. And I predict that you guys are going to find those, and probably not in the not too distant future. And that's the kind of thing that can really blow the top off the valuation.
Yeah, oh, for sure. And if you look at Sarah's, the geological comment around the permeability, the cross faults, as you start to see those and continue to predict them, as you get deeper, maybe we're going to, as you just pointed out, we're going to find the kind of holes that we currently drill, but maybe as we get deeper and we continue to explore, we are going to find even bigger dilation zones and even higher grade as you get deeper into the ore, where more fluids get deposited. And I don't want to look too far in the future, because I'm really focused on delivering what we have and what we've identified to date. But as you pointed out, there's a lot of potential here, and it really stands out that this deposit, this area hasn't really been drilled, and I think that is the great opportunity. And as you pointed out, we're trading.
And most of that past drilling was all related to the mining scenario. So you were in this clay type rock, and even in that you had very high grade. But now that you're getting into the harder rock, which you're predicting these cross faults, those cross faults are why so you have this plumbing system from really deep in these orogenic systems. But the cross faulting is important because that's what opens up the rock even more. And so then you can get those fluids pumping into these well-prepared packages of rock. And it's certainly not lost on me, Mario, that as you get into that harder rock, you're getting thicker and higher grade.
Exactly. And you saw a nice, beautiful picture of the core. I mean, that truthfully is the first time I've actually seen core at Galantas, because most of the high grade we hit was sort of this clay type material that got crushed. And but that hole that we just drilled, you're actually seeing now the sulfides. You're seeing the quartz veining. As we get deeper, I'm expecting, and we're expecting that we're going to get, as you just said, more competent, stronger rock.
And you're seeing the brecciation. So folks, what that means is that when you get this rock broken up into small pieces, that's called brecciation. And that brecciation tells you that you're in this environment where you're getting these cross faulting, where the rocks are all getting broken up, and the fluids can then flow in. It's like a path of least resistance. Exactly. They have the main fault and the cross faults are creating this broken up rock where you can get the fluids pumping in easier and create these these dilation zones and these thicker intersections of high grade.
Exactly. And if we take a macro view here, this is not a new theory. We're not starting from a position where we really don't understand this district. So if we take a step back, 20 miles away is Dalradian. They were sold in 2018 for about $550 million Canadian. They had 6 million ounces, 13 grams. I'm told they continue to drill and they're no longer exploring now because they've identified more than enough resources. And then if you go onto the Canadian side of the pond with Newfound Gold and the Queensway project, exact same major fault structures, high grade gold. There's a little bit different because they do get more of the spiky type material, where ours is, as we talked about earlier, it's a little bit more consistent in terms of the grade. But this is a known geological trend. Yes, it crosses two sides of the world in the pond, but we know what's happening here. And Galantas, to the shareholders' perspective and future investors' perspective, was sort of forgotten because it just never had the money to really drill. But now that we got the great support of shareholders that we do, we're going to be able to produce and drill. And that's really going to be a unique strategy for a junior gold company like Galantas.
You made some big statements there. One is that the continuity of grade. That's really nice to see in an orogenic system. Another thing you mentioned is the comparison. That same fault that you're drilling on goes through Newfoundland, where it's one of the hottest gold exploration stories there is right now. But you have a distinct advantage. You have that underground workings that allows you, see, they've slowed down in their reporting of drill results in Newfoundland because they've got to start from the surface and drill these thick, deeper holes, 400, 500, 600 meters to reach the ore body. You've got the underground workings, and you can easier access to that
Yep.
underground workings. And you know, those companies over there that are having success in Newfoundland have 100 to $1 billion plus valuation, and your valuation is sitting at let me get it here. Galantas's valuation right now is $41 million Canadian.
Yeah, and I think the major shareholders that we have in our company recognize that, and that's why they're very supportive. That's why they came in. You don't see a lot of shares trading hands for Galantas. I just don't think there's a lot of sellers. Anytime anyone goes and buys in the market, the price just jumps. You know, we're one of the few companies out there that are well above the issue price. That when we did our last financing in May of 2021, we did a financing at 30 cents. I think we're around that 50 to 60 cent range over the last few weeks. So, you know, people understand the potential here. And as we continue to deliver, I'm hopeful the only way to get exposure to Galantas is just buy in the market.
Well,
as I said, we have great supportive shareholders here.
The guy that is the pushing the whole Newfoundland play, he owns big chunks of all of them, is Eric Sprott. And yes. Eric Sprott is a key shareholder of Galantas as well.
He is. Eric took the biggest position in our last financing. So we were quite pleased. It's all on SETI, and you can see what his insider ownership is. But he basically picked up a $1.9 million of our $8 million financing, and that kept him below the 20% mark on a partially diluted basis, so that you don't become a controlling shareholder.
Well, you've got great things going on with the Truth Machine. The bigger Truth Machine is the mining, with the underground workings. And before I let you go, I want to talk a little bit about this recent financing that you did.
Sure.
You didn't do it with equity, you did it with debt. And tell the people why you did it that way, and what you're going to do with the money.
Yep. So Ocean Partners, which is a shareholder in the company, one of our board members is the CFO of Ocean Partners. So we raised just over $1 million in debt with Ocean Partners. So we're really going to start production around the end of March. And really what we need is our capital to get us to that position. And I really want to keep the capital structure very tight. And you know, people that know me, I've raised, I don't know, I must be close to $800 million now in my career between the various companies I've been involved with. So the $1 million is a 10% per annum coupon, unsecured debt, 2% structuring fee. And to me, you know, that is extraordinarily reasonable in the position we are, particularly because it's unsecured debt. And if I were to go out and try and raise $1 million in equity and or debt anywhere else, the legal fees, everything else I'm going to have to pay to get to that would be significantly more than the, you know, it's a 6 month, I'll call it a bridge. It's a 6 month period for that debt. And so you're going to basically be paying $60,000 of interest, plus the $20,000 structuring fee. So for me, that was a great solution for the company without having to expand the capital structure of the company. Because keep in mind, we do have around 27 million warrants outstanding. And if those were exercised, and most of them are either exercisable at 33 cents, there's a few of them at that level, but most of them are at 40 cents. That brings in another $11 million in capital. So my view is, why raise more equity if I have potentially a significant amount of equity that can come into the company that allow us to advance this even faster on the exploration front? I just don't really want to issue new equity. I can't put it the other way.
And a lot of those are in the money. It would bring
exactly.
it, pay the debt off with a 10% of the warrants getting exercised. And if you put this into production, you know, in the next month or two, and that should create excitement because you'd be a low-cost producer. and it's likely that you would get a lot of that warrants done, and you could pay off the debt, and no more private placements.
Exactly, and that's always been my strategy. I've been very vocal. That's what I like to do. So if all our warrants get exercised, we would have about 100 million shares outstanding. I'm keeping nice round numbers. And as we move up the value chain, if someone thinks with the success we're having from the drilling, the production, just a nice number, $100 million market cap, that market cap is being generated from an increase in the share price. If we go $200 million market cap, it's being generated from an increase in the share price. It's not being generated by me issuing 20, 30, $40 million in equity all the time. So from a shareholder perspective, we are now truly going to have leverage to two things, which I find very important. Number one, the success of the company, because everything's should be based on having a good deposit and being successful in what you're trying to achieve, as well as a rising gold price without having to issue equity. So if you like gold, if you like exploration, and you like production, then sorry, I think we got cut. Yeah,
no, you're back.
Something got cut off. If you like exploration, you like gold, you like production, I think we're a great story to for potential investors to have a good look at and do their due diligence. I'm always happy to talk to anyone.
Well, it's I look at a lot of companies, and I'm always looking at them relative to their peers, considering what you have. A $41 million valuation is pretty much as reasonable as it gets for a company on the verge of becoming a producer, and then has the potential to deliver with the truth machine as well. So I think that's a good note to end it on, Mario.
Thank you. I agree. I think we're in good shape now going forward.
Yeah, you're in great shape, Mario. I think you've got a big winner here.
Thank you.
Okay, let me close it off. We'll have a chat at the other end.
All right.
So there you go, folks. This company is a high growth story in the gold exploration front, with two catalysts to get a much higher valuation. They've consistently been drilling and releasing high grade gold in close proximity to their underground workings. They now have the money to extend those underground workings, and the extension of those underground workings will bring them to a cash flow situation, plus give them easier access to that high grade gold. And I hope it's not lost on people that what they're looking for is something like a Swan Zone that made Kirkland Lake into Kirkland Lake. And they were a very big company. And the guy who built Kirkland Lake is also an advisor to Galantas Gold. So they have all the right check marks, lots of catalysts. I think this $41 million valuation is extremely cheap. And it's one thing to have an extreme cheap valuation. You also have to have the catalysts to move that valuation higher. And near-term production, we're talking a couple months, and a lot more drilling to come. So as always, my shows are based on information purposes only. And it's important for you to do your homework and speak with your financial advisors. But I highly recommend, if you're looking for a high-grade gold story with a cheap valuation and plenty of catalysts, Galantas Gold fits the bill. On that note, have a great day, and we'll talk to you soon.